Hello, everyone. Welcome to our final This Week in Crypto stream of April here. What a wild month it has been. Lots of dancing prices all over the place. Obviously, traders are not entirely happy at the moment with prices down mostly for the month, looking at most assets. If we switch to the 7-day, we see that Venus is actually dwarfing everything at the moment. But if we just go to 30 days, for example, and we hover over some of these, we see that Bitcoin is actually down about 8.7% in the past 30 days now. Ethereum, which has been a big discussion point, is down 12.5%. And it kind of keeps going down the line here with a lot of dropping prices. Solana, notably down 23.1%. Lido, XRP, Doge down over 20%. Cardano down 28%. It's pretty bloody out there, but there are a few points that we'll go over during the stream that I think are important to keep an eye on, especially related to the amount of FUD that is now happening in the markets. The celebrations and the parties seem to have been put on hold, and a lot of people almost too much seem to be believing that we are in a correction zone. And as most of you know, in crypto, it's never quite as obvious as it seems. Just like people were not believing the hype during the bull cycle between October and March, I think that people might be overestimating the likelihood of us, seeing sub 60K, sub 50K Bitcoin once again. It's never that simple, and we'll kind of go over why, even if those prices do happen again and we start to see Bitcoin at 48K, it's not going to be a linear path there. There's going to be a lot of hurdles and profit taking and things like that from the whales that cause things to go down. And right now we're not really seeing it, which is why the theme of this call is going to be holding strong and not giving into all of the negative discussion out there related to assets. The crowd can be right eventually, but if they are emphatic that prices are going to retrace, that usually decreases the likelihood of prices retracing, because the crowd and the mainstream, they're all trying to sell their bags with the hopes of buying again lower. And it usually doesn't work that way, where the crowd is like, I'm still bullish, but I don't want to buy until it hits this price. Well, more often than not, it never hits that target price that the crowd was hoping for. And the true times where you see prices drop are when the crowd doesn't even want to let go of their assets, even if they believe that the price is a bit overinflated. So we'll go over that. Notice that the market cap overall, it's actually still up just barely over the past week, up about 1% for what it's worth. The volume is down 38% though in the past week. So you can see that the amount of trading happening has really taken a hit as of late. I also wanted to go over a few of the insights that we've discussed over the past week. And we'll do that kind of first this time around. By the way, it's going to be just me on today's call, but I would expect that our good founder Maxim here is going to be back with us next week, and we'll kind of go off of each other to discuss things. But I'll be your host up until the hour ends here, and make sure to drop any questions you have now or later, and we'll try to get to all of them by the end of the call, okay? Now, I want to start out by looking at our activity matrix. This is probably our most popular model on Santiment because it gives such a good perspective of what's going on inside of each network in terms of on-chain activity and social activity. And as you would imagine, things have cooled off quite a bit. If you just take a broad look at this model here, you'll see that it's a lot more blue boxes than red boxes. And blue boxes essentially mean that compared to its 3-month average on that network, for example, Engine Coin, you can see that the label itself is blue, indicating that the most recent day's average is a lot of blue instead of a lot of red, meaning less and less activity in terms of things like active addresses, network growth, whale transactions, etc., compared to normal, compared to what we have seen since January 26th or so, using that 3-month average. Meanwhile, something like Project Galaxy, here in red, is seeing way higher activity than it has been seeing on average for the past 3 months. Now, intuitively, you might think, okay, that means I should be bearish on Engine and bullish on Project Galaxy. Well, it's actually not that simple. Sometimes we'll actually see, let me see if I can open up the actual model. It's not quite ready to load yet, so I'll still use the smaller screenshot. Project Galaxy here has gone up. I know the numbers are pretty small, but it's up about 18% over the past week. And most likely that's because, or I should say, the reason that the network is so hot is because a lot of people are polarized on the asset and they're trading on the network more often than usual. That doesn't mean that the price is going to keep going up. In fact, if the price is going up while the network has suddenly turned way up, that's almost always because of FOMO. So Project Galaxy is actually a candidate to correct, while Engine, which is up 1% in the past week, is more likely to continue to do nothing in terms of prices. So it almost sounds backwards, but you want to look at the price direction of the asset, see whether the network is cold or hot. Let's say the price is going way down and the network has suddenly turned way up and there's tons of network growth and active addresses and whale transactions. That actually means that the price is likely to bounce and it's one of the most bullish candidates out there. So hot networks mean that the direction of the price is about to switch. This is probability wise, certainly not always the case, but we deal with probability here and the likelihood of something happening. If it's cold, that means the direction is likely to continue. And if it's flat, then the cold or hot level is kind of a wait and see approach. So if over the past week an asset is completely even, it's gone up or down 0%, that means that the hotness of the network or the coldness of the network still needs to play out until the asset's price decides to choose a direction. And then that flick on versus flick off switch is more applicable. So one more time, hot networks, price direction is likely to switch. Cold networks, price direction is likely to continue. And just to name a few notables, Project Galaxy is by far, out of the 100 or so assets that we have on this model, it's by far the asset that's seeing the most activity right now. Lever is right under it, a pretty unknown small asset. And then USD coin is actually seeing tons of hype. And obviously with stable coins, it's a different story. This simply means that there's a lot more buying and selling of USD coin than usual. Below that is wrapped Bitcoin, which is actually a very active network at the moment. And I want to show off really quick. I can remember, there it is, G-A-L-X-E, GAL, just to take a look to validate what the model is showing. Yeah, so the transaction volume is suddenly through the roof, and it does appear that that happened yesterday as the price was hitting a top. So I wouldn't be surprised if we continue downwards again, and then the network would likely cool off, and then we may see another spike, kind of like here when the price was sideways and then all of a sudden the network exploded. That can often be a good sign, and that had a lot to do with this big run where the price ended up going up 3x during this point. So look for things like that as great signals. Active addresses, yeah, through the roof. This probably was it was easily the highest active address spike of the year, easily the last 6 months too. Whale transactions also very high, so on and so forth. Also take a look at this spike here, which looks like a lot of micro addresses suddenly exploding. Who knows why that happened, but it looks like wallets with 0.001 to 0.01 GAL in them just jumped by like 57%, insane. So you get the idea. It basically, hugely active networks can have a lot to do with prices soaring. So keep an eye on that. Unless the price has already been soaring, then it means that it's likely to correct because the network got active due to all the FOMO. Okay, besides that, other stories that we've been keeping an eye on. The big story that I've seen circulating the past couple days is the fact that the SEC is reportedly expected to deny the spot ETF proposal. At least according to a lot of the top publications out there, they've gotten wind that the SEC has its hesitance to move forward with the Ethereum ETFs right now, and that has caused quite a bit of FUD toward the number 2 market cap asset. But keep in mind, the crowd has gotten this wrong before, and so have the articles. If you guys haven't thought about it for a while, remember that in early January, Cointelegraph came out, and we respect Cointelegraph, but obviously there was an intern or someone on their Twitter that made the news announcement that the SEC had accepted Bitcoin ETFs, and that was not true. And the crowd got very upset, and the price took a minor dip. And then about 2 weeks later, the actual announcement came, and all was kind of forgiven, and people just started focusing on the Bitcoin ETF. But we've seen major crypto publications before say that something is happening or not happening only to be completely wrong. I still think there's a small chance that it does happen, but yeah, probability-wise, the wide amounts of publications that are saying that it's not time yet, they're probably right. And that is causing a bit of FUD because a lot of people were kind of hoping that the next big story after the halving ended last week and after the Bitcoin ETFs were accepted back in January, then the next step would be Ethereum ETFs accepted, a lot of altcoins start to get their own time in the sun. And there's been a letdown the last few days ever since this story came out saying the SEC isn't really ready to move forward with that idea just yet. So you can see that Ethereum's, at least as of 12 to 14 hours ago when I put this story out, it's by far getting the most discussion increase compared to usual. And you can see below that AMP, Baby Doge, Velo, Crypto.com, EOS, Bonk, Dogecoin. These are other assets that are getting more hype than usual that you can keep an eye on if you're looking for opportunities to either buy or sell, or you're trying to ride the volatility. Those top 10 tokens are usually the ones that are kind of the biggest opportunity to lead the charge and the ones that are driving markets at that time. Midterm MVRV, keep an eye on the fact that a lot of altcoins after this big flush, they are showing a bullish divergence right now on the midterm scale. So we look at the combination of 30-day returns, 90-day returns, and 180-day returns to have this model give us a calculation as to whether the asset is overvalued or undervalued right now. And currently the answer is undervalued based on the amount of blood and losses that have accrued on most of these networks. So you may see a lot of FUD and people betting against the asset at the moment because everyone thought that, you know, the party's over due to that March all-time high and then the big dip right after. This says that you have a better than likely opportunity right now to open a position or add on to your position with little risk due to all the network losses that have accrued. Now, it could be a very short-term bounce that we see, but at least historically, this model says there could be some upcoming bounce that you can take advantage of mathematically based on the amount of risk that you'd currently be facing. And how about Bitcoin ETFs? We mentioned them with the Ethereum ETF letdown that's going on right now, but looking at how active the Bitcoin ETFs have been, take a look at the fact that trading volume has actually jumped pretty high as of late, and we just had our second highest day in almost a month or so. $3.62 billion in trading volume between the top 7 ETFs is pretty impressive. So for those who think that the volume everywhere is drying up, that's not quite the case with ETFs right now. There's still quite a bit of trading going on a daily basis. Now, inflow versus outflow is a different story. A lot have kind of stagnated in terms of new fiat coming into the ETFs, which would be a more encouraging sign, but they have kind of flattened out right now. It does appear that even the equity traders who are normally, at least since the ETFs were announced back in January, they were normally injecting money day in and day out. That party has kind of come to a pause. It doesn't mean that it's over, but at least as prices have become a bit more uncertain, Bitcoin dropping down to 64K and below that for certain timeframes over the past week, it's caused a bit of hesitance in terms of moving new money in. I expect that that'll change once we see some sort of relief bounce, which is not a guarantee, but kind of what the metrics are foreshadowing as of today's call. So kind of wait for that to change, and I wouldn't be surprised if the inflows start to pour in once again. We also put out this story a couple days ago about how Bitcoin's key whale tier, the wallets that have 1K to 10K BTC, and we'll take a live look here shortly, but as of a couple days ago, it appears that it's still rising quite a bit. They hold about 25.16% of all BTC, which is quite encouraging. You can see the gold line has gone up considerably. About 1.5% of the entire supply has been accumulated by this tier. Pretty nice sign there. And the fact that the crowd's bullish bias since the all-time high has been very evident. Now, I do believe it's dropped down a bit since this post, and we'll look at this as well, but part of the reason that the recovery has been tough is because there was a bunch of euphoria after this minor relief bounce that's kind of pushed the prices back down to here, 64K, where it is now. So why don't we take a live look at it? It makes perfect sense. Let's see exactly how. Oops. Oh, I know why. Got to reset. Let's add it back. Number of addresses. Let's look at just 1K to 10K. The number has still gone up. Now let's take a look at balance of addresses. Yeah, it still looks pretty good, and we'll add weighted sentiment onto it. Make this weekly, zoom into 6 months. Yeah, so as we can see, the euphoria, it was way up here. It did calm down a bit as the second half of that week finished up, and now we're actually seeing more negativity once again, which is a great sign due to the fact, undoubtedly, that Bitcoin dropped back down to 64K. Traders who were excited about 67 and the potential of us climbing back up to 70K and beyond, and all the altcoins coming with them, that hype has died down considerably, and we're actually now seeing more of a bearish sentiment than usual, which is a good element to justify a bounce. You can see how much people did not believe that Bitcoin was going to recover during this entire 5-week period where there was a more bearish sentiment than usual, and that helped propel prices between March 16th to the rally stopping on April 14th. Let me see here. That was the whale tier. If I make it price, add there we go. So all the negativity, you can see from the bottom here where the negativity was really going, all the way to the top here. Prices went up about 17% during this time. Even during its peak, a little bit after, it was still up about 15%. So you get the idea. People start to get euphoric because prices are starting to creep up. And now that it's dropped back down, people are like, I don't know, maybe Bitcoin isn't the best idea right now. So you want to be in when everyone's saying Bitcoin isn't the best idea right now. And that's starting to creep in as the mainstream narrative once again. All right. One other story I wanted to show here. So our team put out a great post about the BTC halving and how the dust has settled and what kind of on-chain metrics are revealing the hidden dynamic behind it. And it's a comprehensive story. I really recommend reading all of this. I'm not going to go over it all, but I do want to look at the 3 key metrics based on-chain data that this article highlights. One, of course, is supply distribution. They point out several things, the 100 to 1K tier here in yellow, and how it's risen up considerably. That is a good sign, something you definitely want to keep an eye on. What is not a good sign is the fact that the micro addresses, 0.01 to 0.1 BTC here in red, that's gone up considerably, indicating there's still quite a bit of crowd FOMO that had been going on. Keep in mind, this is only through mid-March, so this is about a month ago. The 1K to 10K, as we just saw, it's been bouncing quite a bit. And we talk a lot about how, oh, my mistake. So this was a chart from 2012, and the article is using it as an example of what you could look for back then, and comparing it to how it's still applicable today. So that's what the supply distribution looked like then. The article points out that there were wealthy addresses that were selling relatively early in the price rally. Small holders were remaining stable, and then mid holders back then, because 100 to 1K way back in 2012 was actually not very much at all. That's kind of the equivalent to like 0.01 to 0.1 now. They were very active and efficient in buying early and selling early, then reacquiring or increasing their holdings before redistributing close to the peak. Generally, you still want to kind of follow the lead of those large holders, though, whether it's a decade ago or now. And then we also want to look at mean dollar age. Now, this one, they're highlighting 2014, but this is a good example for what we can also look at today. Notice how the mean dollar invested age started dropping here around October of 2013, and how the asset just absolutely soared while the red line was dropping. This is an indication that dormant wallets were being very active at this time, moving old coins back into circulation. That's the recipe you want to see really for assets being able to blossom, is older coins coming back into circulation, helping to justify a rise. And then how it kind of stopped here in December and reversed course. You can see how that correlated with the price starting to flatten out and going back down and becoming very choppy. That's a little bit of what we're seeing now, and I'll show that off when I take a live look at the on-chain metrics. And now, last but not least, network realized profit loss. Notice how there were tons and tons of profit spikes leading up to that top that happened in December of 2013, especially a rise in these network realized profit loss spikes. That was kind of a warning sign. And then there's a lot of irrational achievement here as the network realized profits take a break right as the top is forming. And it's a great quote he highlighted: "We're going to be rich, no need to sell now." Yeah, that's kind of the narrative that people often have when they're celebrating after taking just a tiny bit of profit, or they didn't take any profit. That's kind of the lull that is the eye of the storm before the correction happens. So look for that kind of pattern when we take a live look at what the network realized profit loss metric is doing right now. All right, so yeah, I definitely recommend checking out this full article. It is very comprehensive. and not something I'm going to go over fully today, but that's just a sneak peek. It was posted back on April 22nd, so just scroll down our insights page by a tiny bit and you'll see it there. All right, so now let's take a look at exactly how these metrics are shaping up in real time and comparing to what we saw on that insight page. So I'll just go right down to mean dollar invested age now because it's fascinating what we're seeing there. You see this long drop of the mean dollar invested age line getting younger and younger as older coins were being moved. And then it's kind of flattened out here in April, even arguably starting to go up over this past week. That's not ideal for the long term. We want to see the gold line continuing to go down, indicating stagnant coins are continuing to drop in or continue to be moved, thus circulating more old coins back into circulation and letting the smaller to mid-sized traders start to circulate them once again, which is generally a promising sign for price. Well, that happened between October and late March, and then it started to dry up here in April. I wouldn't say that this is like this huge danger area where we're now going to see everything become stagnant again, but we're at least in the short term seeing a little bit of stagnancy again. That's kind of a warning sign that the bull cycle may have come to an end for now. But if everyone starts to believe that, of course, that's when the whales will suddenly start to circulate again, buy up these lower suppressed prices with little resistance and cause a second bull cycle. So from a long-term perspective, we're starting to get into a bit of a concerning zone, but I still think there are a lot of factors that could indicate we're not quite ready to throw in the towel on this bull cycle just yet. Now, realized profit loss, you can see how kind of similar to what the article was showing back in 2013, tons of realized profit spikes. Then we see this kind of stagnant, dormant area in realized profits, especially going further, like right here in early April. All these profit spikes, then in early April, they kind of stop and everyone says, wow, prices have come so high, but they could still go higher. I'm not going to sell now. And that's when the retrace happens. So that's kind of the equivalent right here that we saw in the second week of April when prices dropped. That's very equivalent to what that insight was showing from way back in 2013, where there's a calm and no more realized profits happening and then prices drop. So as of now, yeah, it's still calm. More realized profits could actually be a good thing for the short term, but generally you want to start seeing some realized losses, kind of like what we saw back here, as people were actually starting to give up, thinking the October to November rally was a short-term thing, and then they'd end up selling at a loss right here because things are correcting just a little bit from their top buy that they had. And then boom, we have a big blast off period, and it's almost all realized profits ever since. All right, now for the supply distribution tier, I'm going to go over to our other template. And I'll go straight to my favorite chart here, which is the 10 to 10K coin supply held, and both from a percentage of supply standpoint and total coin standpoint. So looking at the total coins, I still like the trend of this a lot. They were holding the 10 to 10K BTC wallets, 12.97 million back on January 21st, and now they're up to 13.18 million. So they accumulated a little over 2 months about 208,730 Bitcoin. That is tens of billions of dollars. Just great to see from a standpoint of whale and shark accumulation. When they're taking profit like they are here, you can see these green bars which represent the price. They became very choppy, and as they accumulated, look at what that did to the price. Huge surges. Now, I'm still a little concerned about the suppressed amount of Tether and USD coin that these sharks and whales are holding. We'd like to see more fiat money coming in from them, indicating that Bitcoin is staying high, but their stablecoin holdings are also going higher. That is not the case right now. It's pretty clear that they swapped a lot of stablecoins for Bitcoin during this long rally. So it's still good, and I would favor this green line above, the stablecoin holdings that they have. But just keep in mind, it's kind of a mixed look at the moment. And for the record, the green line since about a month ago, looking at March 25th, they're actually holding a tiny, tiny bit less, about 16K Bitcoin less than they were a month ago. So long-term wise, still a very clear accumulation perspective here, but short-term wise, they've become a little bit flat as prices have stagnated and chopped back and forth. Also notice the supply and exchanges. Bitcoin supply and exchanges has actually moved up slightly over the past 3 weeks or so. Back on April 6th, they were holding, so the numbers are sort of irrelevant, 4.06%, but we acknowledge that there's a lot of wallets missing that we're tracking at the moment, but the direction is still applicable. And it has gone up slightly according to this 0.05% of supply moving back to exchanges. So yeah, there are some slight worries of a sell-off, but you can still look at just what a huge drop-off there has been from a 6-month perspective, and we're nowhere close to getting back to what we saw back in October and November in terms of supply and exchanges. Also keep in mind that Tether and USD coin, especially Tether, it's really moved a lot of the supply has moved to exchanges, looking exclusively at the top exchange addresses, and that's a very good sign, indicating there's still a lot of buying power on exchanges waiting to be utilized. All right, going back to some of the main on-chain metrics now. So we looked at some of the utility metrics like transaction volume and active addresses and circulation. How about MVRV? Now, we do see that the 30-day MVRV, the short to midterm signal, indicates that there is some blood in the streets right now. The average returns for wallets that have been active in the past 30 days is way down at about negative 3.3%. So a far cry from being at, what was this top here, plus 23.5%. That indicated we were getting close to a correction, which happened about a couple weeks after that. Now that we're back in the negative zone, that means, just like we saw with that MVRV update, that we are in a better than average position, a less risky position, if you will, in terms of buying or adding onto your position right now. That would be from a short to midterm perspective. Now, if we look at the long-term perspective, 365-day average wallets, there's still some concern there because the average wallet is up 30.7%. So that eventually needs to kind of neutralize in order to justify that we can go higher. From a short-term perspective, yeah, we could still go back to 70K while this long-term MVRV is indicating we are in a bearish position. But you can see it's actually been above zero throughout the past year. No points in time have we seen the 365-day MVRV going below zero. That's pretty rare. We don't see that very often for a full year. If we go back to 2022, that'll obviously change because 2022 was a very bloody year for crypto. I'll give it just a moment because it's loading a lot of data, but you'll see that the negative MVRV was very prevalent, especially around the FTX collapse here, right around this 1st to 2nd week of November. That's when our good buddy Sam Bankman-Fried really dropped markets fast by imploding one of the largest exchanges in the world. And the 365-day MVRV got down to negative 45%. The 30-day MVRV got down to negative 17%. Lots of blood in the streets, but as we can see in hindsight, this was the ideal time to buy with prices actually getting as low as 15K, 15.8K or so. Yeah, obviously, if we bought in right here, we'd be seeing price returns exceeding 305%, more than 4x our investment. So yeah, the MVRVs here really do give you a good perspective of what buying low and selling high can look like. It's very hard to say what a low versus a high actually is when Bitcoin, looking at different time frames can just have such wide perspectives of how prices have looked. It's almost impossible because you don't know which time frame to look at for what a low versus high is. TA traders, there's some very talented people out there who can do a great job of finding those support and resistance levels. But if you supplement those with fundamental data, like how much are average traders actually up or down, you can get a great idea of what a buy low opportunity looks like. And right now there's a slight one on the short term, but no buy low opportunities in the long term, at least not yet. We need to see this blue line drop down pretty dramatically in order to show a true opportunity to get in and basically let your coin sit comfortably based on the fact that there's still so much profit that the long-term hodlers have experienced over the past year. All right, so that's a recap on MVRV. My voice is getting a bit hoarse. Give me one moment, guys. Okay, funding rate. So let me make the price here a little bit more granular. Looking at the funding rate over the past month, we saw quite a bit of shorting going on actually over the past 2 weeks. And you can see how that actually helped prices recover, even beginning, going back to April 13th or so. If we just look at this point when the shorting started all the way until the shorting stopped, the price of Bitcoin actually went up 7% during this time when you see all these red bars indicating that there's a lot of people opening margin and leveraged shorts with the expectation of prices falling. From there, you can see how prices did retrace. We actually started to see some longs here. Notice this part especially when the longs happened. A lot of people were expecting this to be the dip buy opportunity. But when you see a lot of people betting in favor of the price, opening those big margin trades, that's where prices often go lower. And Bitcoin actually dipped another 1.5% to 2% here before the long stopped. You see a few more shorts creeping in, and now it's kind of neutral. I would like to start seeing, obviously, if you're bullish as well in the market, you'd like to see a lot of the red bars start to creep back in here, which would justify a price bounce. In general, when you look at these funding rates, the prices are going to move the opposite direction of where the crowd is leaning. For example, looking back right around April 8th, you see this sudden long spike again because everyone is seeing prices reclaim that 70K level. And then right when all those big long margin and leverage trades come in, that's when prices drop. All these longs get liquidated and we see prices kind of reset and the funding rates reset. You see another minor instance here. Longs come in after there's some encouraging bouncing. Boom, they get punished once again. And not until we started to see this shorting going on between the 13th and about the 21st, all the way up to maybe the 23rd, that's where you saw prices recover. And now we've kind of reset and everyone is sitting on their hands going, I'm not sure what to do because the direction has been so unpredictable. Obviously, with these metrics, it becomes a lot less predictable, but you can bet that most of these people using the fund, opening these big longs or big shorts and being part of these funding rate data points, they're not using the sentiment metrics the way they probably could. So be a contrarian when it comes to funding rate, and you can end up profiting pretty considerably. Whale transactions, I won't spend long on here. Just know that they have been dropping considerably. Whales are, as we saw with the flat line on that other chart right here, they're kind of sitting and waiting right now. There's a lot of people biding their times, waiting for the next big move in either direction. Just seeing if there's anything else I can show here. Yeah, why don't we jump into the social end of things too, and then we'll get into some questions. Social volume, actually a lot less talk about Bitcoin, and this is kind of going for everything in the markets right now. Just less discussion overall because it's been kind of a choppy ride where the strong opinions on both ends keep getting kind of contradicted, and it's causing people to feel like they're not ready to make predictions when prices are very unpredictable at the moment. So social volume for Bitcoin is way down. Social dominance for Bitcoin is way down too, as people are talking a little more about altcoins, especially Ethereum, over the past week. That has a lot to do with the social dominance going down for Bitcoin. Not really a price indicator so much right now. Look for the big spikes in Bitcoin discussion to be a good reversal indicator, but that's not happening at this moment. Interesting to see development activity picking up a little bit. I wouldn't put too much into the dev activity for Bitcoin, but it's still good to see that it's rising at this time, according to its GitHub. RSI, by the way, below 50, which means there's a better than average opportunity at the moment. It's not in a scary zone, but it's slightly below 50, meaning the RSI is favoring bullishness by a tad at the moment. Also notice the total amount of holders as a final on-chain metric here. It's kind of flattened over the past week, especially since the 22nd. We saw this big ascension from April 6th all the way up to the 22nd, where the total amount of non-zero Bitcoin wallets went up by 1.15 million. That's quite high in a short amount of time. It went up 2.2% in total just during this 16-day stretch. But since that time, it's only gone up by 36K, 0.07%. So this actually is a good thing. Small wallets are not being created as much. That's what the majority of these wallets are. It's a lot easier to make a 0.001 BTC wallet than it is to make a 1 BTC wallet. So they've become stagnant as small wallets have become a bit more uncertain as of late. And with that uncertainty from small wallets especially, comes a greater than likely chance of a price rise. Okay, so moving over to our social dashboard now. Taking a quick look at some of the hot topics, we see consensus is trending due to its lawsuit being filed against the SEC in seeking court intervention to declare Ethereum not being a security. This is one of the main reasons the SEC is hesitant to move forward with the ETFs right now. It's been a story for about 5 years now for Ethereum, ever since it became mainstream, even going back to 2017 and 18. A lot of debate whether it and XRP and some of these other top cap assets should be deemed a security or not. Obviously, XRP won that battle about a year ago, maybe almost 2 years ago now. But it's kind of popping back up as a debate with the SEC and Ethereum at this time, because a lot of entities like Consensus are trying to get it approved. Stripe is also trending due to the announcement it'll enable USD coin payments starting this summer after a 6-year hiatus from crypto payments. That's actually great news. More utilization from mainstream trusted entities like Stripe can be great for prices in the long term. The SEC and Ethereum at number 3 and 4. This is related to Stripe once again. Suze is related to the Ethereum and ETF. And MetaMask is an interesting one as well, because it's right there along with Consensus due to the SEC serving Consensus with a Wells notice and alleging MetaMask is operating as an unlicensed broker deal. Consensus also sued the SEC over attempts to declare Ethereum a security. So MetaMask, which is not often in the news, is suddenly popping up due to the attention from the U.S. government as declaring it an unlicensed broker at the moment. That's interesting. I wouldn't be too worried about this. I don't want to give investment advice when it comes to self-custody and how you're holding your coins, but just understand that MetaMask does appear to be under fire at the moment. And for what that is worth, just be a bit cautious there and keep an eye on that if you're holding any coins in MetaMask. I don't want to make too big or too small of a deal of it, other than to say that it does appear to be in the crosshairs at the moment with the SEC. FBI also trending due to warnings against using unregistered crypto money transmitting services. That includes MetaMask, of course, so likely related there. GDP data came out. This is for the US specifically, indicating a 0.5% month over month rise and a 2.9% year over year rise. And the market was expecting a bit higher. So this was a slight letdown, actually. And then there's something related to apes, NFT stuff coming back into the news a little bit for what that's worth. If you're interested, check out what's going on with apes. And we have not talked about NFTs in quite some time because the heyday kind of happened back in 2021. But we've been expecting for a while that the NFT space gets another cycle of hype eventually, and perhaps assuming altcoins get another run here as we get close to the summer, maybe NFTs will start to be part of the mainstream interest the way it was back in 2021. Before we look at a few other social aspects, I do want to look at some of the other sectors, including NFTs. You'll start to see a lot of these different watch lists popping up, and we're going to be converting them to screeners. So that when new assets are added to our watch list, they're just automatically tagged as an NFT or as AI or a metaverse related coin, and it'll be included with those screeners. But you can see NFTs not really doing too hot as of late, but everything has become a little more flat. Meme coins have stood out as one of the best performing sectors over the past week, up almost 7%. Liquid staking assets are doing pretty well, but you can see a lot of sectors are actually down. The Solana ecosystem, we know that Solana is down a bit over 20% in the past week, so its entire sector is down during that time. But yeah, there's not a lot of sectors standing out at the moment. AI and big data, for what it's worth, according to this group of assets, down 1.5%. According to the top 100, it's actually up 7.8%. Let's take a quick look at that, because that's quite contrary to the other watch list. So if we look at the infographics, it's probably being powered by a few big assets. If we look at the past 7 days, yeah, so Aleph, I've noticed this asset's really been taking off lately. This probably has a lot to do with how or why the market cap has continued to grow. And a lot of the top AI and big data assets have continued to perform well. Near up 26%, Theta plus 16, T-Fuel up 38, Akash up 15%. So yeah, a lot of the bigger large cap AI and big data assets have carried the load as of late. For what it's worth, Polka Bridge and Effect AI, there's still a few that have dropped considerably. So if you're in AI and big data, just make sure you're tracking which networks out there are showing the best bullish divergences at any given time. Okay, a few more things on the social end, and then we'll stop by the comments section to see if there's a few questions we can answer. Looking at the historical crypto trends dashboard. Note that both bull market and bear market mentions are down considerably. especially bull market. Very few people are believing we're in a bull market, which is generally a good sign. Even though bear market has been dropping as well, it's not quite as steep of a drop off. AI continues to see slightly rising interest. That's a good sign. Meme coins obviously have performed pretty well. Pepe is still through the roof compared to a lot of other assets. So I'm not surprised to see it's hanging on here despite the lowered social volume all around. And notice that Bitcoin ETFs are starting to get new hype. I'm pretty sure that's related to the one-off topic of Ethereum ETFs right now. Trending coins, yeah, you can still see Ethereum just through the roof in terms of discussion related to every other topic right now. And then looking at crypto narratives really quick, which is still in beta, notice that the halving is still being talked about quite a bit. I'm pretty sure this is related to a lot of people discussing the dropping price since the halving happened last week and how people feel a bit defrauded that this was supposed to be a bullish event. As usual, it's just traders being a bit impatient here. Obviously, a bullish event that only happens once every 4 years, you can't really make too much of the first week after the halving. Just like we saw with the Ethereum merge, where prices dropped for the first couple weeks after the merge occurred, a lot of people started to get bearish and think that they were tricked into believing this event was a big deal. And then all of that FUD they paid dearly for as prices started to really rise after that. So the halving is a hot topic still. AI, you can see, still up there. Buy the dip. It's had its moments, especially right here, back on the 16th, but it hasn't been as prevalent of a topic ever since. It looks like there's a weak lag on this, if I'm not mistaken. Let me give it a hard refresh. Yeah, it's lagging a bit here, folks. Sorry, it looks like it's only going up to the 18th. So I'll talk to the devs about getting this back up to real time. Maybe there's a pause in the data due to some things that they're working on right now. All right, with that said, why don't we just jump over to a few questions and comments, maybe look at an asset request or two, Max, if you see some. Just T. Okay. Threshold. And we'll go to our main group of metrics here and see what's going on. So Threshold is the number 192 market cap asset. I don't know if I've analyzed it before on Sandbase, but let's see how it looks. It is an ERC20, so we've got plenty of metrics related to it. The price has looked like a lot of prices since late March and dropped down, but this one has dropped down a lot more than most. Down about 43.5% since March 24th, the past 5 weeks or so. Transaction volume spikes kind of foreshadowed that this drop may be coming with a lot of, I presume, profit taking from larger wallets during this time. So it's down pretty considerably. I would imagine that the circulation and daily active addresses look the same. You can see those same spikes that happened with the transaction volume end of things. And not much is going on here. It's kind of back to its normal resting state. Let's take a look at MVRV. 30-day, we can add it here. And we'll add the 365-day here as well. Pin the axes together. There we go. So the 30-day MVRV for Threshold is actually down 21%. Like a lot of altcoins, it's kind of been hammered a bit here in the month of April. This indicates that we're in a clear opportunity zone. We were in an even better one here about 10 days ago on the 16th, when the average returns got all the way down to about negative 29%. You can see what happened the last time we saw something similar. This was a clear bottom here in late January, early February, and then prices from this point really took off, going all the way to the peak. If we want to get extreme, the price went up 146% from the time that you could have bought in while average returns were down around negative 20%. So not necessarily are we going to see the same kind of run up. This was obviously a huge spike, but we're in a similar position with the 30-day MVRV where you'd be buying in while the other traders on the network are in a lot of pain right now. If you would be so bold as to jump in right now, the 365-day MVRV, for what it's worth, is still very high, likely due to this 140% plus run up that happened all the way up to late March. But the long term doesn't look too bad compared to what it did then. I'd still say like the ideal time would be when both lines are below the zero axis, like back here in late November. But you don't want to be too precise and wait for an ideal time that may never come. I'd say it's kind of a short and midterm opportunity right now, but a long-term still mild concern, and you could potentially wait a bit longer. Whale transactions, really not much going on here at all. It's back to neutral. You can see very clearly the whales had a lot to do with this huge top. They took a ton of profit on the threshold network here in late March, right after that huge spike occurred and threshold decoupled from the rest of the markets. Now, threshold's price is sitting at about 3.5 cents or so right now. So we'd want to look at whale addresses. So sharks will start about 1 million to 10 million, and then whales are going to be these two tiers. Let's just combine them all. 1 million up to 1 billion coin wallets. So the amount of the supply held has been pretty flat letely. Let's check to see if the overall amount looks any different. Nope, about the same. Let's check out price, see how correlative these wallets are with the price month in and month out. Yeah, okay. So going back to late November, we see this huge accumulation. All of a sudden, the 1M to 1B wallets jumped 1 billion coins, about 26.3% increase on their coins held all of a sudden. And right after this time, between November 24th and January 14th, the price went up insanely, plus 82% during that time. You can see they actually started to take profit right here, and then prices went down considerably. You can see it's down 26% up until this point. So price went down 15% when the sharks and whales started to take profit. Then they start to go up again, and obviously prices erupted here over 2x before they started to take profit again. And since that time, the price is down 30%. I think these sharks and whales in this particular category, holding between 1 million to 1 billion threshold, they are a very good indicator as to where prices are going to go next. At least anecdotally over these past 6 months, they've been spot on in their direction. They've been pretty flat for the past couple of weeks, but the midterm trend still and long-term trend looks like they are moving down, meaning there's probably a more ideal time to jump into threshold when the sharks and whales begin to accumulate once again. I don't think you're necessarily going to see a huge, 1 million coin accumulate, or 1 billion coin, accumulation all of a sudden, but maybe just a little bit of a jump here would be a very good sign that we're about to see a turnaround. As of now, the sharks and whales aren't doing a whole lot. Mean dollar invested age, yeah, you can see when they suddenly took all their profit that the dormant coins moved a ton, but this was more of just a profit take than a long-term indicator. You can see they do this every 1 to 2 months, and it has a lot to do with prices actually retracing. So it works a little bit different than Bitcoin. As of late, it's just been a big stagnant fest where the coins are just sitting in wallets and not doing a whole lot. So maybe wait to see if you see something more gradual and maybe even just a slight drop. That would be a great sign that some dormant coins are healthily moving back into circulation. Supply exchanges, yeah, pretty flat at the moment. That's a good sign, though. You're not seeing a big run up in supply moving to exchanges, which obviously happened during this big retrace in late March. Social volume and social dominance wise, not much there at all. It's been pretty normal. So it is under the radar. Sentiment, it's been so under the radar that you can see that it's been mostly negative. Not a lot of believers in Threshold, even during this time when it was surging and 2xing in market cap. And then development wise, you can find much better projects than Threshold when it comes to activity from its team. It is barely active, not really seeing much at all. At least it's seeing more than zero. There are some coins that just don't have any activity, period. But this team appears to be minimally active when it comes to innovating, going through the effort of innovating and improving the project. And its RSI is below 50. It makes sense after this big drop here. So there is a slightly better opportunity than usual on the price side of things for at least a short-term rise. Total amount of holders, yeah, you can actually see it's dropped off a bit since April 20th. The amount of holders has dropped by 11. Obviously, this is a smaller asset, so it's just a small 0.16% reduction here. That's actually a good sign because it means small holders are really starting to doubt the asset and it's not rising the way it has been over the past 6 months. All right, I think that is a good recap of the markets over this past week. We'll be back at it next week, folks, to look at how the early May shape-ups are going for the on-chain and social end of things. But in the meantime, I want to thank everyone for joining, as always. Wishing you a happy and healthy weekend. Try not to look too short-term on the markets right now. Take a breather. Don't look at it hour by hour, as tempting as it is. We're in chop mode at the moment, but I do believe there is some upside going on, especially with the amount of pain that is showing up on the average trading side of things for most wallets out there. But we'll keep you updated if there's any news about Ethereum ETFs, especially a change of heart from the SEC. And check our insights feed. As always, we'll put out a few more stories today, maybe even one or two this weekend, and keep you posted on all the latest and greatest happenings out there. So thank you, Max, as always, for running the stream. Hopefully we have Maxon back next week. And take care, everyone. Talk to you soon.